folks. We get the S&Ps negative by 12 points right now, just breaking below, actually, that acceleration at 2 o'clock, 67.88, negative by 12. And right now, folks, we're going to jump over to our man, Tim Ord. You can reach Tim at his website every trading day, ord-oracle.com. And right at the front page of TFNN, folks, you hit the services tab. Tim's got 2 great webinars, the 6 secret ratios every trader should know. And we talk about many of these, whether you're talking about the SPY VIX, okay, the TLT VIX, and then as well, the secret science of market tops and how to identify those market tops. Both of those, $149. Check them out, folks, on that services tab at TFNN. Tim Moore, good afternoon.
Good afternoon.
Well, we've had a few things happening in the market since the last time we talked.
Yep.
But hey, we have a volatility, that's for sure. Please talk to us. What are you seeing in this market, Tim? Where do you want to kick it off?
Actually, I was a little bit early on this. This is a sentiment indicator, and the bottom window is the equity put call ratio reading 21-day. I think I covered this last time. Then above that's a 10-day average of the equity put call ratio and a 5. And I marked the times going a couple of years here, going back when all 3 of those time frames reached bullish levels, which is 0.65 or higher. And we had that kind of, the market actually kind of came down, but everybody's really leaning bearish, which is bullish. And so I was kind of always looking for a little bit too quick on the low here. I've been actually long since October, but we've kind of just gone sideways here. It didn't really give a sign of a bear market here or anything. So actually, I'm still long. I think the rally's actually started now. This is the, I think this is the daily.
Okay.
This window, this is the SPY right here. This window, then right below it's the VIX, and below that's the SPX VIX ratio.
Okay.
And it's a pretty, anyhow, when you hit below the lower Bollinger Band, this is on a daily. Normally on a short-term basis, the market's too stretched too far from the norm, and the norm's a 20-day average, and that's this line right here. That's a 20-day average.
Okay.
So every time you get above it or below it, so anyhow, I marked the times when the SPX VIX ratio and the SPY hit below the lower Bollinger Band, and we did that yesterday, and actually the day before too. And I marked all those times going back. And so I was kind of being bullish here, actually beginning of March, and I'm still bullish. We're down a little bit on the trade, but I still think we're going to rally here. And the reason why, the last one was the daily. This is the weekly. So the bottom window is the SPX VIX ratio on the weekly time frame, and this is the weekly SPX on a weekly time frame also. But I marked the times in blue there when you got below the Bollinger Band. So this is on a weekly time. There's one failure right here. That was April decline. It went down lower, then gave another signal. But
that's a pretty cool chart. I agree. Definitely.
Yeah.
Look at those spikes. And that's a weekly, right? Yeah, those are weeklies. That's, yeah.
Yeah.
So. Or at least the top one is. Yeah.
Yeah, so it's a weekly. So you got the daily and you got the weekly saying the same thing. The dailies are stretched too far. According to this chart.
For those listeners that don't know, a Bollinger Band, right? You know, I was talking to statistics. Is that 2 standard deviations, basically, in terms of the average there for the type of latitude that it's given? Yeah. Is that what that's representing? Okay, because I had to look at it, early on myself and go, yeah. So that's pretty cool. I just love how that, because statistics, bell curves, man. I like those bell curves in statistics.
It's a great indicator. It's kind of a boring indicator. It's not like really exotic or anything. But matter of fact, I was with John Bollinger in a seminar way back in 2092, I think it was, and before I actually met Tom. And he just was displaying this indicator back then, and I was actually part of that. There was about, 10 of us speakers, and John was there, and I was there. McCullen Osclair people were there. Anyhow, so I was when he was just beginning to put that book out. I was there when it all kind of started, and the indicator works really well over time. I mean, it's not no indicators are perfect, but anyhow, let's get back to the analysis here. But yes, it's 2 standard deviations. So in other words, if the market kind of just creeps up, and the Bollinger and the SPX VIX ratio kind of just creeps up, you won't get any signal. That means, like here, you kind of crept up and hugged the upper Bollinger Band. That's usually good. You start getting above it is when you get in trouble. You got it kind of like right there and right there. But anyhow, it's getting back to this. This is a weekly, so you got the daily hitting the lower Bollinger Band, and you got the weekly hitting the lower Bollinger Band, and you got the S&Ps and the VIX. So you got a weekly and you got a weekly time frame and a daily time frame saying the same thing. So you're probably an important low here. How high is high? I think we'll at least get back to this upper Bollinger Band up here, which is around 700 or 7,000 on the SPX. Are we going to break through it? Don't know. We just may go up there and try to get through it. Can't get through it, then we may, I don't know, flip more sideways. Not sure yet. The reason why I'm kind of hesitating, like this is a big move that's going to go into stratosphere, is because the 10-day trend, which I don't have a chart on it right now, is like 0.91, and that's not a lot of fear in as far as the trend is concerned. That's kind of bothers me a little bit. So, but I'm still looking, at least on a short-term basis, to get back to the previous highs, and we'll see what happens there. Now, I got a couple of things to talk about here. This is the commodity index. And so these are all commodity prices, and I just want to warn, your listeners that what's going on in the market. So this is a monthly chart, goes back to 2004, thereabouts. Anyhow, this is a head and shoulders bottom. We're just breaking out right now. We had a great big spike in GSG over the last couple of weeks. And so this head and shoulders bottom is probably going to get an upside target, at least 40. And, maybe a lot higher, I don't know. But this head and shoulders pattern, it's been building a base since 2015. So this pattern is basically 11 years in making. So it's not just a short-term bounce we're going to have here. We're going to have a we'll cover it later when we come back. But
and you were talking about this last year at some point, man. I remember, and boy, It's been a rocket ship this year, man, that thing. And I couldn't believe, because it hit me so hard, because I was like, why is this thing not doing anything last year when, of course, you got metals higher, all this stuff was happening. Well, it's happening now, man. Look at that number. Folks, we're coming back with Tim Moore. We're talking commodities. We're talking, commodities. We're coming right back. Stay tuned. Welcome back, folks. S&P's negative by 10 points, trading at 67.91. You get the NASDAQ almost flat, Dow slightly in the green. We're talking with Tim Moore, folks, and we're talking commodities right now. Okay, go for it, Tim.
All right, so this is the head, which is this area right here. The left shoulder, which is this area right here. Then you get the right shoulder, which is, and this is also William O'Neill's cup and handle pattern too. So you got a couple of different things. This thing should get at least a 40, which is basically this area back in here. He's got some resistance. So beyond that, I don't know. But anyhow, here's another one. I just want to point out how the shift of what's going on in the market. So this is a big shift. This is probably one of the reasons why gold, and we'll cover gold here too. That's coming up next. But this is USO, which is basically the oil index, and it's a monthly time frame. I think we talked about this once before.
Yes.
And anyhow, we had a big. You have to have a sign of strength through the previous highs. You have to have that. And the previous highs was this line right here, and it looks like about 85 or something. And anyhow, you blew through that line with obviously a great big sign of strength with volume and everything. So that's a confirmed breakout of this cup and handle, and this pattern's also a head and shoulders bottom. And this pattern goes all the way back to 2015 too. So you got 11 year of kind of a sideways market per se, and a head and shoulders bottom. So this is not like a flash in the pan, is what I'm trying to make the point. This is a longer term pattern. It's going to take a while to complete itself. And what I'm trying to say is you're going to feel the pain for a while on these gas prices. How long? The pattern suggests we may go back up to 350. That vicinity, and it took us a year and a half to go from here to here. That's the reason why I leave this blue. And there's a lot of symmetry in the market, and there's a chance that the same thing could happen again. And that would imply the rally probably started in January, even though we've been going up 3 months. Everybody's starting to notice it. But it comes out July 27th, or July 2027, that we may see 350. And that's kind of projection. That's right now, but we're going to go higher. And we're going to go higher for a while just because this pattern took 11 years to complete, and it's just not going to be a month or two before it falls apart. It's going to be years before this falls apart. So anyhow, if we get to 350, I don't know what that would mean in gold or in oil prices, but it'd be a hell of a lot higher than what we're paying right now. So we'll have to wait and see. So anyhow, that's all kind of inflation. You got the commodity market, which is this ETF here, and you got the oil index, which is basically oil prices go up. That's going to be inflationary. So let's get back to the gold market. So that kind of opens the sign on that. We showed this chart before. It's the monthly XAU to NDX. Probably should put QQQ here. It'd probably be a better video. So we're measuring gold stocks against the NASDAQ stocks. And you have what they call coming off of a bottom. They call it initiation of an uptrend. And that's when things just get really whacked out, just like we had in let's see, maybe it's this one. Okay, this is initiation of an uptrend, kind of a huge price surge along with a volume surge. This is initiation. So this is the beginning of a big advance. That same thing is happening in here. This started back in 2024, but the RSI it basically stayed between 50 or between 30 and 50 in general, and we finally broke out to 70. So, 75 probably, or 77. I forgot what the number was, but that's the initiation of an uptrend. So that's the start of something big to the upside, probably on a multi-year time frame. So you got the gold issues, or you got the oil issues, initiation of an uptrend. You got the commodity market, initiation of an uptrend, and you got gold stocks, initiation of an uptrend. So it's going to change the landscape of the equity market. So are the equity markets going to do fine? Probably. It looks okay, but these other markets look much stronger. I'll put it that way. So my money's actually in USO, GSG, and gold, and the gold stocks, not gold. I think gold has pretty much ran its course for a while, and percentage-wise, the gold stocks I bet way outperformed the gold itself. Even though gold has been outperforming the gold stocks, now the gold stocks are going to come to the forefront. So this is probably a place to be over the next year. So let's kind of look at the short term of what's going on. This is GDX. The pattern that may be forming here with what I call a three drives to top pattern, and actually we were back here, Tom, talking about that because I thought that pattern was three drives to top pattern, and I was looking for this pattern to come back down to this low. Yeah, I never did, and so I was actually short there, and the market kind of just went sideways right here, then exploded up, and I finally got long, and I'm still long. Well, that pattern may be forming here. I'm not sure yet, but if you notice here, we made higher highs on GDX. Well, this is the 18-day average of the up-down volume. If you notice, we pretty much matched the high, if not made it a little bit higher. So really, there's no divergence. Not like we had here, where GDX was making higher highs, the up-down volume is making lower highs, this up-down volume is making lower highs, and GLD ratio was making lower highs. So there's quite a bit of warning that pullback was coming. Here we don't have that yet. So here As GDX made higher high, this indicator, which is the up-down volume, made higher high, and this is GDX GLD ratio made higher high. So there's no divergence right now. But we did trace against the previous up rally. We traced over 61.8% retracement. So now we're going to try to rally again. If we rally to new highs, which I think we will, and this indicator here, which is advanced decline, this is the up-down volume, and this is GDX-GLD ratio, fails to make a new high, we'll have the same divergences we had back here. And so I think that's what's going to happen. So 3 drives a top pattern is not a long-term topping pattern. What they call it is in the book is a timeout and an uptrend. It's just kind of a shake-up. So if we go up and make a new high, and these indicators give lower highs, you got a big divergence, and it would imply that you pull back down to where the pattern began. Well, the pattern began right there, give or take around 93. So I think that could be what happened. And it's just kind of slap in the face. It's kind of the same story I thought might happen here. And this may not work out, don't know. But it's something I'm watching for. So we get up around 125, and these 3 indicators are not making higher highs. I would brace for a pullback. So either you can sell out and hopefully buy back, or if it does pull back, buy more at 93 area, or give or take in that area. Nice. But the uptrend's intact. I mean, the bigger trend is bullish. You want to remain long-term long, just short-term. This is a short-term type scenario that may develop. So I just want to point it out.
It's quite a range, right? Even if we get a couple of those, you're talking about from almost 93, like you said, to almost 117, and even potentially a little higher if you're making that next drive.
Yep.
Tim, thanks so much for the information. Always appreciate it. Folks, check them out. ord-oracle.com and those great webinars at tfnn.com. Appreciate it, Tim. We'll talk to you Thursday.
All right. Thanks a lot.
Thanks so much. We'll come right back, folks.